Welcome to Face the Analyst. I am your host, Jay Taylor, and I'm really pleased to have with me today Jean Martineau. He's the president and CEO of Dynacor Gold Mines. It's a company that trades on the Toronto Exchange under the symbol DNG. Approximately 30 million shares outstanding. $1.77 is its most recent price, giving it a market cap north of $50 million. This is a company that is involved in Peru, a very, very interesting company, so I'm really, really pleased to have you, Jean. Good to have you on Face the Analyst.
Good morning, Jay.
Really an interesting story. I paid a visit to your offices in Montreal last summer. The stock was selling at about 30 cents. I said, this is a company nobody's known about, and I told my subscribers about it. And from 30 cents to $1.77, obviously I'm happy and my subscribers are happy. But what I saw in your company at that time was fundamental value and cash flow and minimal dilution. You've been able to generate cash flow in Peru from your custom milling operation, and that is at the Acari facility, the Acari mill, and there's also, I guess, some gold deposits there as well. But talk to us a little bit about your operation this year. You produced 33,000 plus ounces of gold, and you generated a very nice cash flow. Talk to us about how you got into that business in Peru.
Well, we came in Peru in 1996, and as I worked it 4 years in Venezuela before, I knew a little bit South America. So I recommended the company at that time to get associated with the company there, not buy 100% and get rid of them. Because our idea going to Peru was to have an operation to pay for the exploration. Because the usual problem with the exploration companies, you raise $2 million, you spend it on exploration, after that you get nothing, or you have something but you don't have any more money, right. You return on the market and you finance again. Yeah. And there is, in many cases, no end to that. So we just wanted to generate our cash. So we buy this operation, we finished to build a small mill there, and we began operation in '98. But the situation at that time with the gold price was pretty bad, because when we signed the agreement, the gold price was $396, and as you know better than me, eventually the price went down to $240, $250 for 6-7 years. Exactly. So it has been tough years. But after that, we just recovered that, and last year was a very good year. We forecast at the beginning 25,000 ounces of gold. We reviewed this forecast in April to 28. And finally, as you said, we produced a little bit more than 33,000 ounces of gold. And that it has been a very good year for this. And this year, we forecast between 42 and 45,000 ounces of gold, more or less, for 2011. Mm-hmm. And we're pretty comfortable with this forecast.
Well, one of the things that I appreciate about you is that you under-promise and over-deliver. So many companies like to promise the moon and then they fall short. So I think over time you build up a reputation of integrity when you don't over-promise and you deliver at least what you promise or what you suggest you can do. Talk to us a little bit about your relationships with the suppliers of ore. As I understand it, you buy the ore from small producers in Peru, and just talk to us a little bit about that, if you would.
So in Peru, you have many small producers, small companies, 15, 20 miners. They organize themselves in companies. They produce, but they don't have any mill. So they sell the ore to existing mill. And we are about 7 or 8 different mills in this southern part of Peru. We are the only public company doing that there. But we buy the ore from these providers, these producers. Mm-hmm. So we process it and we sell it, and with the profit, we pay for the exploration. That's why we don't have to go and dilute the stock in the market at an inappropriate moment. Like as you said, when we met together in May, I think, in Montreal, the stock was 30 cents, and we didn't want to finance at this price. But now it's going much better. We're on 177. We have some cash. We're okay. We have enough to do the drilling campaign we project for this year. And with the results, if the results are very good, it's going to reflect in the market. And there, we may finance maybe a little bit to accelerate that, but at a price that is convenient for us. Mm-hmm. So this is a situation here. So we created this company in 2007 with 20 million shares. And going on the Toronto Stock Exchange, we did a financing of $4 million at 40 cents. So we began with a company at 30 million shares. And now we had a note to pay to the motor company, which we did in December. So today we stand with 35 million shares, and we're there. So we don't have to dilute the company. And if we issue new shares in the future, it's going to be at a price that we want to issue that. So we're protected against a huge dilution in this company, because if the market is going badly, we can just continue to operate our mill, generate cash, and go on a slower pace for exploration.
No, I appreciate that. That certainly is true, that the biggest risk I think investors face with most junior mining companies is the risk of dilution. But getting back here to your custom milling operation, how many suppliers do you have?
Well, we have probably more than 50 or 60 different suppliers.
And these are real small scale, mom and pop type producers, small companies?
Yeah, we're buying like 4,000 or 5,000 tons per month. So these guys produce 50, 75, 100, sometimes 20 tons per month. We buy everything we can of good quality, because we have been there for 12 years, and we can select our providers, so we go with the best ones. And as we have 50 or 60, so one is gone, we can get others. And you have, with the actual gold price in Peru, I tell you, you have a lot of people working on the gold area, gold and copper area. So this is not a problem.
Yeah, you were mentioning before we started filming here that in fact when people lose their jobs in Peru, they go out the hillside looking for gold, I guess, and it's a sort of more than a hobby, it's a survival means for some people. And so there's endless numbers of these people that are looking to find somebody that can process their ore. Let me ask you, do you have any competition?
Yeah, as I said, there are probably 7 or 8 different mills, as our mill there. But we are one of the biggest, and we are surely the mill with the highest recovery rate. So you have all these privately owned mills. I know a couple mills, they have a 75, 76% recovery rate. And I would say the average should be probably 80, 82. And we have a recovery rate of between 94 and 96. So it gives us a large advantage on the other ones. So we can select better our providers and get more money out of 1 ton of ore, for example.
Sure, and with a higher recovery rate, you're able to compete effectively to offer more to them than the other guys could offer.
Exactly,
I suppose.
exactly.
Well, this is your cash flow. This is your cash cow, as they say. It's your means of growing the company without having to issue shares, which is really the thing that I liked most when I first met with you in Montreal last summer. But you also have a very exciting property, which I think is the blue sky, which is really the important, let's say, exciting part of your company, and that's a project called the Tumi Pampa. Talk to us a little bit about the Tumi Pampa.
Well, Tumi Pampa is a pure exploration property which we bought in 2000. It was there was nothing done there. We bought it from a prospector. We built a 34 kilometers road going there. We were the first company to go in this area. After that, everybody followed us and bought some properties around. But we bought it because there were some veins, gold veins on the surface, and we saw that the Spanish people 500 years ago had worked there. And at the time, the Spanish had to work on veins close to 1 ounce per ton because of their recovery rate, which was about 50%. So when we saw that, we said, geez, here we have high-grade gold veins. And so we bought the property, and we did a couple drilling campaign in 2002, 2003. And after that, with the gold price, we couldn't generate a good cash flow out of the mill at that time, so we stopped the exploration there. And we restarted it in 2006, 2007 with surface exploration. And we did a drilling campaign with 21 holes in this 2008. And at the end of 2008, we uncovered this skarn there. So we did just 2 holes on the side of the skarn because it wasn't known the extension of this skarn. And we've got in this hole up to 15 grams per ton of gold. And just the other side of the skarn, there was some small miners extracting copper with grades in veins from 2 to 6, 7, 8% copper. So when we saw this skarn, these guys working for copper the other side, on our side working on gold, we began to explore that. And today we have more than 1,300 surface samples there on which about 900 are channel samples, so not just grab sample, but channel samples. And the grades are just fantastic. It goes from traces up to 25 grams per ton in some place in gold, and copper up to 5, 6, 7%.
Wow.
It's not the average,
No.
but what we did, we compared these results with the surface result they found on other skarns in the same area. And I remember you that we are in an area where it is called the supergiant skarn in this area. And in this supergiant skarn, you find Las Chancas, Las Bambas, which is 1.1 billion ton developed actually by Extrata. They're going to put there, invest $4.2 billion. You have Antares, which was just bought out recently. You have Northmount, which is
major deposits.
Yeah, and we speak here about of deposit between 350 up to 1.1 billion tons, and with an average copper grade, it goes from I think it's 0.43% for Northmount to about 0.69% in copper. Mm-hmm. But the difference with the other skarn we found around, it's their gold grade is pretty low. It's often 0.01 or 0.019 grams per ton, for example. And on our surface exploration, we got a very good gold sample. Mm. And we think that this skarn is probably the same kind of skarn than the other ones, but we may have a much higher gold grade because of the presence of these gold veins on the southern part. We identified up to today up to 12 veins on the southern part. So we think that this skarn may have been fed with gold over the copper by these veins. Well, so it would be a wonderful situation. Now what we have to do is to drill the skarn, because we just have 2 drills on the really side of the skarn. So with all these surface exploration, the odds are that we should find something. So we're beginning in the coming days, it's going to be announced, we're beginning a new drilling campaign. It's going to be 16,000 meters. The first part of this is 6,000 meters. We're going to drill that through the coming months, which is the raining season actually, but there is no problem there. And probably by beginning of May, we're going to have already some results, some holes, and there we may take the decision to add more drilling machines there and accelerate this, because we identified 4 very high-grade targets where we're going to begin with. But this skarn today has been identified as being 4.2 kilometers long by 1.5 kilometers wide. So it's a huge structure. So there is a huge potential there.
Okay.
Eventually, what we have to prove is the grade is economic.
Okay.
But it's a huge structure.
It is huge, Jean, which leads me then to the question, if you have some major deposit of gold and copper there, is it something that Dynacor would likely advance itself, or would you look for a major partner to come? Because we're talking about a very major, potentially a very major size project. Let's say that those dimensions that you talked about are mineralized with economic grades. We're looking at, $1 billion capital expenditure or so.
Exactly.
So would you envision Dynacor being the company that moves that forward, or up to what point?
Well, I think we have the means to finance all the exploration and the drilling we need there to identify the resources. Mm-hmm. So it's going to cost probably, I don't know, $10, $15 million. We're going to have to put a lot of drilling there. But this, we can do that ourselves. Eventually, after that, it's going to be a huge project, if it's like the other skarns. And there you speak about investment close to $1 billion or more than that. It's out of our reach. Mm-hmm. What kind of deal we can do at that moment? We can just sell it, keep a royalty on this, or keep a small percentage. We're going to see there at that time. But eventually, it's not Dynacor is going to put it in production, because it's
huge. Yeah,
we were looking for veins there and a mine of 1 to 2 million ounces of gold.
Right. We
just encountered the skarn, so well, it's a wonderful situation, but it's not in the. We won't put it ourselves in production.
Okay, Jean. So let's say that our hopes for a major discovery don't pan out. You still have the vein system there. Yep. Then I guess you would look at possibly moving that forward towards production at some point?
That's for sure, because we encountered the Manto Dorado, which is quite a wide structure with 6 to 7 grams per ton. It's just on the surface. We uncovered that doing the road there. We identified more than 12 veins, on which 4 or 5 veins are veins of 2 meters wide, 3 meters wide, with very good grade. So this is something we were looking for to put it in production ourselves. So eventually, if we have a huge skarn and it's sold out to a company, it's going to go with this probably because it just on the southern border of the skarn.
Right.
But if the skarn, for example, doesn't give what we expect, we're going to go to with the gold vein, and there we're going to build a mill on the spot and process it ourselves.
Right.
So this, we speak about a potential of maybe a mine of, we have, Buenaventura have some mines of this kind in Peru, and these are mines of 700,000 ounces up to 1.8, 1.92 million ounces of gold. It won't be a mine of 10 million ounces, but it still may be a very, very nice operation there. And this, we would put it ourselves in production.
Well, it certainly is a story that's very, very interesting with the cash flow and the major upside potential. What do you see the risk for investors that might come in and buy your shares now at $1.77? What do you see as the major risk that they may face?
Major risk. Actually, at the actual price, for example, the risk is very, very low because as the way we work with our mill, if the gold price goes up or down, it doesn't change very much our margin. It changed a little bit. Sure, when the gold price was $400, our margin was much lower than that. But if the gold price goes up and down by $100, it doesn't change anything for us. Where we reduce our cost is increasing the mill capacity. So the risk on that side is, I wouldn't say zero, but it's minimal. There is almost no risk there. And as we expect to generate between $9 and $10 million in cash flow this year, at the actual price, it's quite. I'm quite comfortable. Well, the main risk, I would say, the main risk for the blue skies, the Tumi Pampa property doesn't give what we expect.
Right.
But with the surface result we have good reason to have a very, very good hope on this there. But it would be, I would say, the general market. If we have a huge recession like 2 years ago, the investor just go away. But at the actual price, I would say for an investor, the risk is really, really minimum.
Anything else you'd like to add before we conclude our discussion?
Well, we're beginning the drilling campaign now, and we will just accelerate that. We have the means to do the drilling campaign we want to do. And if the results are spectacular, for example, it's going to reflect in the market. So it means that the price will go up, and we'll be able there to finance more, to accelerate the drilling campaign. So I mean, if the results are spectacular, in May we can decide, hey guys, we're going to put 5 drilling machines there, and we're going to spend this year $7 million or $5 million. So we're going to have the means to do that. And if the results are slower to come out, because we're not in the good spot, well, we just can continue at the actual pace with the money we generate with the Akari mill. So this is I worked years to get to this situation. Now I'm very pleased to say we're there, and we can go in the market if we decide to go in the market. But we're not. We don't have a gun in the back to say now you need to get and raise money now. So I'm very, very comfortable with this situation and very pleased with the actual situation.
Well, Jean, I'm very pleased that you were able to come on Face the Analyst today and talk to us about Dynacor Gold Mines. I'm very pleased that you've been so successful in building your company. I'm so pleased that our subscribers to my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, have made a lot of money. I believe that if you're successful, especially with that skarn deposit, there's going to be a lot more happy people out there who buy the stock even at these levels. So I'm just really delighted that you were able to come and talk to Face the Analyst. It was really a pleasure meeting you again.
Well, it has been a pleasure, Jay. Thank you very much.
All the best.
Thank you.